Good afternoon, everybody. This is Dan Hussey with ALGODayTrader.com, bringing you our June 17th, 2011. We'll call this the NYSE session and the European session recap because NYSE has been so slow. Unless the S&Ps or something really moves in this afternoon session, it's really looking like just a slow day, and most of the price action has already occurred. So, beginning with the S&P 500. We are looking at a big daily short off the highs that's traded a number of times now and been defended and gotten reactions every single time it's traded. We're looking for the market to really trade back down in the 1580s or the 1530 support areas where there are a daily and a weekly extension long that could potentially be the support levels that take us up into and through new highs for the year. Could we go to new highs? Certainly we could, but we'd have to break this daily short off the high in order to do so. So as it stands right now, the path of least resistance seems like it is to the downside, as we are seeing resistance coming in here at this 1640, 1641 level on the S&P 500. This daily level is traded multiple times, and every single time it trades, it gets just a very strong reaction. And so far, not so different today. We did hold a long off of the lows that traded up and again into resistance where we have gotten our reaction. We have a gap fill from yesterday that got filled in this run up, and we still have a gap fill open today at a 1620 quarter. So to me, I see this as, we're entering summer trading, and the S&P 500 and U.S. indices can really just decide to go into a range and be extremely volatile with little to no measured moves in entire legs. And you can see that here. There was no discernible trend. It was just straight up off of whatever support held into a resistance. Okay, and that's what we're seeing here today too. In today's price action in the Globex session overnight, no discernible trend, no discernible trades, just straight up into our larger resistance zone. And that's what we're anticipating going forward. Is we're simply watching for the S&P 500 to continue carving out its range, so to speak. We are actually making a brand new low in the tick for the day. Wow, that was quick, all the way down 16/19. That was very quick on the S&P. Really starting to fall apart here. We have a new low with a new low in the tick as we're making this this video here. It is a Monday, so we take this with a grain of salt. There may be, and this is not a support level I would ever trade, but we did trade straight back down into potentially a 50% Globex long, so we need to watch for the reaction here, and it does look like we are starting to get a little bit of one, and it is the low in the tick for the day. So don't want to ignore that, but again, we're still flagging and holding that daily resistance as a level up here at the 50% short. Going through the lows we just made at 1629 without a new low in the tick, we'll have bearish divergence, and we'll go into the end of the day with bearish divergence. So we have no divergence right now. The low, this low this afternoon is the low in the tick. So this is a very important level that the bulls actually pick it up from here. Otherwise, this could result in a collapse all the way back down to 1620s to fill the gap from Friday. Okay, the gap we left open on Friday. Dollar yen, stepping out to a 4-hour chart. We were holding and we were watching an extension long that traded once to target, twice to target. Same anchor new high actually has broken now, okay, on the dollar yen. So we have broken our 4-hour daily or extension longs. We're looking for a pullback into what could be a full halfway back long at the 90 level. Going down to our hourly chart here, we can determine and see the trend. And remember, we're drawing up this full daily short off highs because it is in fact the next measured move. It either trades down into 90s directly or up into 99s, okay, on the daily. But we do have an hourly trend that has been holding. It was a traditional series. Excuse me. That inside this last leg down, we were able to witness an extension that traded and held its 61.8 line once, twice, and now same anchor new low actually held on Thursday. Okay. Inside of this, we broke the long off the lows, we broke the short off the highs, really dipped in the 61.8 line. To me, this is looking like a short-term wedge, and potentially some kind of flagging consolidation at lows. Okay, so until we break above a 96 quarter, downside is in pressure just from this extension alone. Otherwise, above a 96 quarter, we're potentially looking for it to rally up into the 99 figure, specifically 98.75s, where I would anticipate downside for the dollar yen all the way down to 90. So there's a substantial 1,000 pip fall off here that we could go off a cliff in the near term, but we're very much on the sidelines and watching. Okay, we actually did print a new micro low here. It's not enough for me to really call it bearish divergence, but technically it is on the S&P. I'm sorry, should kind of skip there. So we're going to be watching for this short or the shorts to take us through this 1629 level now, and I don't see any support until 1620-ish, okay, where the gap fill is. I actually want to move right over to the Aussie dollar because it's very important that we note we have traded up into the hourly extension short that we have been watching and have had drawing same anchor new low for some time now, and it's drawn from a 99.60 anchor to lows. This anchor was traded, I think we counted 11 times here. It has bounced and cascaded on the way down. And this would be the 11th or a substantial number of times that it's traded down into these lows. Last week we witnessed and we saw a full ambush long trade up into this short. The next in the series long has now broken. Okay, so now we can draw up on the hourly chart our hourly charts the full short off the high, as well as I want to draw up, and this is only to watch now because we're continuing our downtrend in the Aussie. But to draw up and watch the full long, because when it breaks, we will also be drawing up an ambush short off the high. Okay, but right now we have broken the full short, and actually today we are able to see how 3 times this hourly short traded, it went to its first target and got free. So clearly showing shorts have been in control, bears have been in control in the short term, but we are now looking for continued downside in this this trend. Let's move to the futures to get the micros up. I'm only drawing up shorts on the Aussie right now. We are holding an extension short, a little bit of a front run here of about 5 pips exactly. So now we want to go same anchor new high. This is drawn from, really this is in the Globex time frame. I can give you what the spot pull is here in just a minute. Let's go to the 5-minute chart. Here it is. It's this anchor at 95.80s, it looks like, to lows. Bit of a front run, but same anchor new low there, and that's what we're watching play out in the near term here. Certainly a run up into 95.90, excuse me, is not out of the question, and it certainly could be a take, but make sure you get free and trade it as such, okay? The euro, really absolutely no update from last week. We've gone completely sideways since Thursday, inside what is clearly a wedge, clearly lack of decision on direction. I'm not touching the euro until it tells us otherwise. We did break on the daily, the daily short we're running into. Excuse me, I need to draw that up. We broke the 61.8 line, so we do have a potential full pullback to the 130.70s where I would be a buyer. But I'm on my hands watching the euro in this little 15-minute wedge it's doing up here at highs and letting it determine its next move and telling us what to do, okay? So that's actually it for today. Oh, nope, I'm sorry, I lied. The Aussie yen, actually another very clear Sorry about that. Things froze up a little bit on me. Another pretty clear trend here. From an hourly standpoint, we had an extension short that traded to target. Same anchor, new lows, traded like to the tick last week. And now, after that short traded, you can see it here, this 50% line had traded. There was a long against this that was holding. That long broke, and it gave us an ambush short off the recent high overnight. And even inside of this, we are witnessing a series of shorts, just micros, but a series of shorts that have held now, coming down off of highs. So shorts are definitely in control in the Aussie in the short term, and at least on the hourly chart, they're getting reaction. But we can't remember that stepping back to weekly, we have a massive next in the series weekly long that has been front run by 20 pips. So I need to really be careful. But we're going to wait for the shorts to break here because the shorts are holding against it. Wait for the shorts to break and before we get into the swing late trade long. And of course that break needs to happen at a 93.36 right now. 93.36 prints, I'm a buyer in the pullback. Until then, it's until then you're fighting against a weekly next in the series long, and you really missed the opportunity to be short, which was at 92.50. So. But anyway, that's all we got for you today. It's been a relatively slow day. Definitely not one for the books. It's been quite a snoozer. So with that being said, everybody, have a great day, and we'll be back with you as price action develops.